Turning hard times to good times. I am your host, Jay Taylor, and I'm speaking to you from New York City on this, the 12th day of December, 2017. I do want to remind you, I am the author of Jay Taylor's Gold, Energy, and Tech Stocks. It's a weekly and a monthly newsletter. You can go to miningstocks.com to sign up for my letter. Miningstocks.com or call our number here in New York during normal work hours, 718-457-1426, 718-457-1426. Also like you to consider subscribing to Chen Lin's excellent newsletter, What is Chen Buying, What is Chen Selling? And we have Chen on this show from time to time. He has some great ideas, works extremely hard to know when to buy them and when to sell them, and has done a remarkably good job for himself as well as his subscribers. So you might want to consider chenpicks.com. Go there to sign up for Chen's letter. I want to thank each of you for listening to the show, making it one of the more popular shows in the Voice America Business Channel. Also want to suggest that you keep your questions, your comments, criticisms, and praises coming along. Send them to questionsfortaylor@gmail.com. Questions, the number 4, Taylor@gmail.com. We do want to thank our sponsors for making this show economically viable. This week's sponsors are RN Resources, Bonterra Resources, New Range Gold Corp, Novo Resources, Genesis Metals Corp, and Klondike Gold Corp. I've titled today's show, Is America Approaching Hyperinflation? Charles Hugh Smith visits for the first time. Robert Carrington and Michael Oliver, who will be with me momentarily, join me again this week. Now, something is hugely wrong with our government's CPI index. I think most of you would probably agree with that. Their inflation statistics suggest that the cost of living is rising by less than 2% a year, but the living standard of the bottom 95% of Americans, at least, suggests otherwise. Part of the middle class decline has resulted from disappearing higher-paying, low-skilled jobs. But of even greater significance is the relentless rise in the cost of life-sustaining essentials and the foundation of the economy, like education, healthcare, energy, labor, etc. Charles Hugh Smith will be asked to explain his views on what are the origins of the decline of the middle class. Why are costs going up so much? Why are wages disappearing? And, how can we plan for that in the future if it continues? After our first commercial break, a few minutes from now, Robert Carrington will update us on the New Range Gold Corp project. It's called the Pamlico Project in it's along the Walker Trend in Nevada, and next to some very high-grade gold mines. Robert's a very exciting story, certainly one that I cover in my newsletter and one that I have invested in personally as well. But right now we're very privileged once again to have Michael Oliver with us to give us his latest thoughts on the markets, and specifically today I think he'll comment more so on gold perhaps than in most days. But before I say hello to Michael, just let me tell you, implore you to go to olivermsa.com, olivermsa.com. Consider signing up for Michael's excellent newsletter. I get it, and so many missives come through each week, more than we have any chance to talk about here, nor should we, because Michael needs to earn a living. But he is kind enough to pass along some very key ideas and the results of his work to you free of charge. Thanks, Mike, for joining us today.
Hi, Jay. Great to be back.
Always good to have you. And how did jury duty go?
It was a wasted half day, as usual. And then, goodbye,
Yeah.
We don't need you.
Yeah.
I got my check yesterday, $12.
Oh, wow. Well, I mean,
All right.
so how many hours was that? 3 or 4 hours,
about
probably.
4 or 5 sitting in a room, people coughing all over each other.
Certainly not minimum wage, is it? Even down there in the South where you live. Yeah. Well, anyway. All right. Civic duty. We love to do our civic duty. Okay. Well, all right. Forget about the commentary and the baloney here. Let's get into the real stuff. Gold. Twice before this year, I believe, Michael, if memory serves me correctly, you sort of drawn a line in the sand and said and not based on price, but based on your momentum work, if gold were to fall below that level, you would turn neutral, not bearish, but neutral. Now, and in both of those cases, it came very close within a whisker. Gold turned back up, and you never even turned neutral. You've been bullish the whole time. Now we have another test at this time, and you mentioned we came within a whisker of your line in the sand of 1246. I think it was 1246.20.
1245, a weekly close below 1245, using the nearby front month, which is still December contract, though it's illiquid, but it is still the front month.
Okay.
Last week closed 1245.20. And this time I'm using a weekly close. Now, let me caution. There's no way, based on long-term momentum of gold, annual momentum in particular. When you look at a gold price chart and you look at annual momentum, you get two different pictures, and annual momentum is so, it's copacetic. It is not breaking anything. It's not threatening to break anything. It's only price that's saying boo. And price has said boo, 2, 3, 4 times in the last year and a half.
Yeah.
And each time it says it, people run screaming from the room. And yet the annual momentum still buoys the market. It holds. And right now, well, no, gold's not up that much. It's up 7-8% on the year.
Yeah.
Okay. And it's given back a lot in the last few months. Short term, gold looks like it's oversold and due for a bounce. And by bounce, I mean a $15 rally. Now, it may, if it does close a week below 1245 settlement price, then, my go-to-neutral numbers in play. But I thought about that over the weekend, and I issued a report yesterday that's offered a different alternative or choice for the long-term gold investor or the gold mining investor. And that is put a Band-Aid on it. Don't exit. Don't go to neutral. Buy puts. And the puts to buy, I think there's no need to buy out puts that are 6 months out into the future. February GLD puts, GLD is the bullion ETF, very liquid. February options, expire mid-February, gives you more than 2 months. My assessment of monthly momentum of gold, and it's taking it down a time scale from annual to monthly, 3-month average oscillator I'm looking at. It tends to swing in 4 to 6 month bars in one direction or another. And 6 is highly rare, by the way. In fact, the last 3 years haven't had a 6 month swing in an oscillator since before 2013. They've all stopped at either 4 or 5 months, swinging in one direction or swinging in the other. This is month 4, which tells me the likelihood of the window remaining open for the bears might be another month, maybe. But their clock is getting short, so whatever they're going to do to gold, they better do it now, and they better do it by the end of January. Otherwise, it's highly likely their clock is out, and gold's just going to halt and turn from wherever it is, or maybe turn even before then. Therefore, if you're concerned, I don't think you need to go out and buy puts 6 months out and pay a lot of money for them. I think you can buy at-the-money puts on GLD fairly cheaply because you're only going out to February. And if the gold market explodes from here, well, you're going to lose on your puts, but you'll hold your core position. That's my preferred recommendation to people. Now, everybody's different. Everybody has different risk tolerances, different portfolio sizes. They might be in miners or gold, but basically this is a parachute or a Band-Aid, I called it, that can solve the problem right now. But I only think the Band-Aid needs to be on for about another month or so, and that's it. I think the risk is, Anyway.
All right. Well, that's good advice. I mean, that's a good way to play it, I would think, if you're really nervous about this situation and you can buy some protection cheap, go out to February on the puts, GLD puts, for example. We have to ask you about Bitcoin because it's all the rage. I know to you it's not a very big deal, but obviously it's a big deal to somebody. I see it's selling at $18,400 as I look at the screen at the moment.
Wow.
What are your thoughts about Bitcoin?
Well, I don't know. I was very pleased the Wall Street Journal quoted me on it, but my main point we did an article in Bitcoin just before it got to 10,000, which is to say, a few minutes ago, a week ago, and a week or so ago. And the main point I made about it was, one, it is a blow-off. It's a bubble. There's no question, and there's no telling where it's going to stop. But that once it does have its crash, its correction, it's going to be real. It will come back mature from a lower level, 50% correction, 80%, whatever. Remember .com. .com bubble dropped 89% from the high. But it survived and it matured, and in fact, we now know that particular segment of the tech industry was far more than we even thought it was. So it survived its bubble, and I think Bitcoin will survive its breakage of its bubble. Bitcoin and its competing other cryptocurrencies. Another interesting thing from my history, I was first hired by Hutton in 1975, and that's when gold was legalized. and I worked for the chairman of the COMEX at the time. When gold was legalized in 75, it was at the peak of a bull market that had been going on in the cash market for several years. As soon as futures became available, enough shorting stopped it, and you made your peak right there, literally, when they started trading in the U.S. And you dropped from $200 down to $103 in a year and a half. And then gold resurrected itself and went to 800 by 1980. But the point being that once the futures markets commenced trading, there was a vehicle to short it. It was a trusting vehicle. Now, as soon as the real Bitcoin futures start on the Chicago Merc, which I believe is on the 17th, I think at that point it will be very interesting to see if sufficient sellers step in the way and begin to fight this thing and perhaps put a top on it for a correction. It'd be very interesting. It's just an anecdotal piece of history, but it happened to gold. As soon as they legalized the futures, bam, it topped. And a year and a half decline, almost 50%.
You certainly have to think that at least gold has some intrinsic value, whereas Bitcoin is limited in the amount of Bitcoins that can be out there. I get that. I see why that might make Bitcoin more valuable than fiat money. But nonetheless, what intrinsic value does it have? And certainly there'd be a lot of people out there looking to profit on the short side, I would think, given this exponential rise, Michael. We're going to have to leave it go at that today. Unfortunately, we're out of time. Thanks so much for spending time with us and providing your wonderful insights. Always welcome. Thank you so much.
Jay. Bye-bye.